Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 1st, 2024, and we're diving into Cardinal Health's first quarter fiscal year 2025 earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Cardinal Health has released some intriguing numbers this quarter, and I'm excited to break them down with you.
Great. Let's get started with an overview of the report. Cardinal Health reported a revenue of $52.3 billion, which is a 4% decrease from the same quarter last year. However, they raised their fiscal year 2025 outlook. John, what does this signify?
Well, the decrease in revenue is primarily due to the expiration of a large customer contract. Excluding this, revenue actually increased by 15%. The raised outlook reflects confidence in their core business, particularly in the pharmaceutical and specialty solutions segment.
Revenue and profitability overview. Let's start with the top line. Cardinal Health reported a net revenue of $52.3 billion for the first quarter of fiscal year 2025, which is a 4% decrease compared to last year. However, despite the dip in revenue, the company has shown impressive improvements in profitability. John, can you shed some light on this?
Absolutely. While the net revenue saw a decline, the GAAP operating earnings were $568 million, and the non-GAAP operating earnings increased by 12% to $625 million. This was driven by significant growth in their pharmaceutical and specialty solutions segment. The non-GAAP EPS also saw a 9% increase to $1.88, which is quite impressive.
And they have raised their fiscal year 2025 non-GAAP EPS guidance to a range of $7.75 to $7.90. What does this tell us about their future outlook?
This indicates strong confidence in their ongoing operations and strategic initiatives. The raised guidance suggests that they expect continued growth and profitability improvements throughout the fiscal year.
Segment performance analysis. Now, let's delve into the segment performance. The Pharmaceutical and Specialty Solutions segment reported a revenue of $48 billion, a 5% decrease. However, the segment profit increased by 16%. John, what's driving this growth?
The growth in segment profit is primarily due to a higher contribution from brand and specialty products, including the early seasonal launch of COVID-19 vaccine distribution. Additionally, their generics program performed well, offsetting the impact of the customer contract expiration.
And what about the Global Medical Products and Distribution segment?
This segment saw a 3% increase in revenue to $3.1 billion. However, the segment profit decreased due to higher manufacturing and health and welfare costs. They are working on mitigation initiatives to address these challenges.
Lastly, the other segment showed a 13% revenue growth. What contributed to this?
The other segment's growth was driven by strong performance across at-home solutions, nuclear and precision health solutions, and OptiFreight logistics. This diversified growth is a positive sign for Cardinal Health's overall business strategy.
Strategic initiatives and future outlook. Cardinal Health has been active on the strategic front as well. They announced the acquisition of Integrated Oncology Network for $1.1 billion. How does this fit into their strategy?
This acquisition is a strategic move to enhance their Navista Oncology Alliance, providing additional capabilities to support independent community practices. It adds over 100 providers across 10 states, strengthening their position in the oncology and urology care markets.
They also completed a $375 million accelerated share repurchase program. What impact does this have on the company?
The share repurchase program reduces the share count, which can enhance EPS and return value to shareholders. It's a signal of confidence from the management in the company's financial health and future prospects.
And they plan to open a new distribution center in Walton Hills, Ohio in spring 2025. How significant is this development?
This new, modernized distribution center will support their global medical products and distribution business, improving efficiency and service levels. It's a part of their broader strategy to enhance operational capabilities and customer service.
Key takeaways. As we wrap up, Cardinal Health's first quarter results show a company that is navigating challenges while capitalizing on growth opportunities. With a revenue of $52.3 billion and a non-GAAP EPS of 188 cents, they have raised their EPS guidance for the fiscal year. The acquisition of Integrated Oncology Network and strategic initiatives like the share repurchase program and new distribution center are poised to drive future growth.
Indeed, Cardinal Health is demonstrating resilience and strategic foresight. Their focus on core segments and strategic acquisitions positions them well for the future. Investors should keep an eye on how these initiatives unfold in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cardinal Health's performance in the comments below. Until next time.